Welcome back at 7:43. American employers slowed downsizing in June, the lowest number of layoffs since October of 2022. So, of course, everyone wants to know how this news about the labor force will impact the market. With us this morning is George Pikounis, a financial advisor with Burns Financial. George, good morning and thank you for being with us.
Thanks for having me.
So let's talk more about the jobs numbers from June and what that means overall, and before we talk about how this will impact the rest of this year.
Right, so U.S. employers cut 40,709 jobs in June. The biggest thing about this is it's down 49% from the number of cuts that were announced in May. So when we're looking at that, the labor market itself stayed pretty strong despite the 500 basis points worth of interest rate hikes that we've seen from the Fed. And this is also the lowest number of layoffs since October 2022. Earlier this year, we saw the tech sector. They were kind of downsizing the fastest compared to other sectors. So that's just one thing that we've been noticing this year.
And obviously last month, at the top of last month, everyone was keeping a close eye on what the Fed would do in regards to a rate hike increase. No movement at all, or a rate hike decrease if that was a possibility. They did not do that rate hike increase as expected. So based on that, what can we expect this month and moving into the rest of this year?
Well, even though the Fed did not increase rates in June, Jerome Powell has suggested there's going to be increases that come later this year. So the question that everyone's asking is, like, does this mean layoffs could pick back up later in the year? And that's kind of what we have to keep a close eye on in the coming months, is pay attention to what rates are happening, what increases are happening, how much it is. And then even though they decreased in June, like, we are seeing like a moderate increase in new claims for unemployment benefits. So paying attention to the trends, finding out what Jerome does say in the following months is what we're going to be keeping an eye on.
And on to the point of layoffs, obviously we don't know what's going to happen until it's happened. But in the meantime, what can people at home do to prepare for the possibility of masses of layoffs?
The general advice we give as advisors, even to our current clients, prospective clients, is make sure you have an emergency fund, right? So have things in place just in case. We want that regardless of what's looming, right? I've talked about even weather-related things. Like, you want to make sure that you have these things in place because we don't know what's going to happen. But in particular with the labor market in general, make sure this is something that you're prioritizing, especially if it's a concern. And feel free to sit down with an advisor. They can go over this type of stuff with you too. But main advice for always for this kind of stuff is stay diligent, stay prepared for this type of stuff. And my philosophy's always been, prepare for the worst, hope for the best, and that's what we'll be doing the rest of the year.
Anything else you want to say to the numbers we should be getting out later today? Any other expectations? Anything else people should brace themselves for?
At this point, no, I don't want to overhype it. We take the data as we get it as well. And, as I mentioned, the biggest thing we're looking at and waiting for is the rate hikes more than anything else, because that we see bigger shifts with.
All right. Well, George, we appreciate your time this morning. Thank you so much.
Hey, thanks for having me.
Time's now 7:40.